What is up, everyone? Once again, welcome to another weekly charting class slash preparation for the market. So I had you guys put the tickers in the Discord. We're going to go through an alphabetical order like usual. So to start off, we're going to start with Apple. So I just want to be on the 4-hour time frame so you guys can see the rising wedge that finally broke down with the trends of higher highs and higher lows. Now that we've broken down, I've been telling you guys, and this has been like every contest on the trend for the higher lows. I've been telling you guys if we get a pullback, we want to see the previous all-time high on Apple contest, which is this level at 181.4 area. We're finally at that level after 2 days of selling off for Apple after their earnings. If I take this to the daily real quick just to show you the visual of that, this is where we're at on the daily for Apple, which risk to reward wise, obviously very bullish. We're at the previous all-time high, which we broke obviously back in early June to keep pushing. Now that we're back to the heavy resistance, which is now going to act as a support level, watching Apple this week, literally the biggest focal point I would say is holding that level of 181.4. If we don't hold that and we drop down, I have a level at 179.5 that should act as like the main go-to support on a pullback. As we do bounce, which I'm expecting a relief bounce on the market Monday and Tuesday, possibly into Wednesday. Not saying straight up, but at least slow uptrend, higher lows forming. If we do bounce off 181.40, I would be watching these previous levels that we had to break on the downside to get to where we're at right now. So putting in actual levels for resistance on Apple on the 2-hour, which I'm currently on. I don't want to put it at the bottom wick. I'm looking at like the full body candles that also correlate back here with a few upper ticks and everything. So just a rough area, roughly around 187 a share. I'll make this orange. So that's going to be a $6 push. I know a lot of people say, like, why don't you put a level here? Why not put one here to get in between? I'm focused on the gaps. That's what personally I like to look for. If you want to look for like smaller time frame levels, if you take it down to the 15-minute or even the 5-minute, you can use levels from Friday and also the earnings after hours on Thursday with how things reacted. You can use these levels, like the breakdown for Apple that could not break off open, that we would wick down, pull back up, wick down, pull back up. You can use around 185 a share. So we're going to be trying to bounce off the main support, which is the previous all-time high at 181.4. First resistance on the upside, you can use the 185 a share. And then above 185, we have 187. Outside of that, basically 190, 191, 192. And then the main support hold, if we break the 181.4, is going to be 179.5 area. So now moving over to AMD. So I'm on the daily just to show you guys how we held this trend line. We've had this trend here for months. I didn't just go in and put this here before class. The idea of a trend line is just to see the visual compound as the candle wicks like compact in the same zone that respects, like a line can be moved slightly either direction. It's not a pinpoint. It's just a good visual to see where it's holding on those zones. We pulled back and touched that trend and bounced on the daily, going down to the 2-hour. I want you guys to realize how buy stops are affected. Heavy volume comes in to sell off because they know retail, being the way that we are, we put in stops on major structure breaks. So understanding that, we've had massive dips pull up since beginning of July until the sell-off from earnings. We literally wicked underneath. I'm going to make this highlight red. When we broke structure here, that's where the buy side is for the stops for retail. So as we broke through, they get bought up, which means retail is selling. Someone has to buy those from them, which is pushing this right back up from the hedge funds or the big money, basically. That is why I always tell you guys, if you do try and swing off of a position for calls at the bottom where the heavy support usually is, you want to size light and play with time. Using that strategy for AMD where we bounced off that level, roughly around $109 a share. The very next day, we pushed up to 115. The following day, back up to 119. So we had just under about a $10 push in 2 days after that sell-off, which if you're on the 1 minute, the 5 minute, the 10 minute for the day of, it's like, holy crap, we're selling off on AMD. I got to swing puts, not realizing they're wicking this out to get retail stops. People that are long, they have their stops where this break of structure is. So once we break down, everything's getting bought up. All the volume's coming in with the big money. So going off of the actual level base for AMD right now, I just wanted to talk about that breakdown before getting into the levels on the current time frame where we currently are with the PA. We've had around the same levels. I'm going to take away a few of these since they're all in the same designated area. Keeping $112 a share for that intraday. When we have those rejections, the support, usually intraday levels for 112 is when this affects the most. Off open, they're not as effective. It's usually when lunch hours or going into power hour, volume is circulating to find direction before the move end of the day. It plays a huge part. So if AMD does possibly have a sell-off Monday or Tuesday, I would expect the main support being around $112 a share. Before we reach 112, this is one of the key zones in this area. Notice how we tried to hold support on it. Then we had rejections. Now, as we try to break above Thursday, we rejected that zone again. Now we're back above from Friday. And we kind of tried to hold on a pullback into the day that was bought up. So we can use a level in between these zones, which is roughly around about $115 a share, 114.9 area. Anywhere in there is going to act as a nice support. It could wick underneath. That's why it's always important to understand the bigger time frames and realize the possibilities with the charting and the ideas of the buy side being broken on structure, which is like a liquidity grab or the breakdown, because retail focuses on dead center levels, while market makers and the hedge funds, they focus on where can we get them out just to buy in cheaper. So I'd be watching around the 115 to see if we kind of get some consolidation on that support there. If we break under, there's a lot of chop on AMD between 115 as a resistance once we break under it, and then the main support at 112. So between 112 and 115, there's a lot of chop. I would want to see 115 hold before going long on calls. If we break under 115, I would either look for puts on a recontest rejection at the 115, fill the gap down to 112. And then if you just want to wait for the best opportunity for calls, I personally would wait to get calls at the 112.3 area bounce. That's the safest, low risk, high reward probability. If we do bounce off the 115 and push upside, these levels I'm not going to change because we've had these for a few weeks now. So around 118 a share and 120 a share going off the larger time frames with AMD on that situation. So we got the main levels there. If you're looking at the bigger picture like we are right now, realize price action. If we don't hold 115, we're going to pull back. If we bounce off 115, we're going to trend to the upside. We're in the dead center of this zone right now. So don't try and force a play because I got to get in AMD before something happens. It's 50-50 currently. We need 115 to hold support, or we need 118 on the upside to break. Those are the two logical cases off the open. But if we wait for a pullback for calls, the main entry for calls, I would say, is this bottom support at 112.3. And then for continuation for calls on the upside, a break of 120 and a push. Main rejection for put entries is around 120 to reject. So you want to play the bigger sides to fill the gap in your direction. Don't try and guess in between. Don't put that kind of pressure on yourself. So looking at Amazon, I'm going to go to the daily real quick just to show you guys how we have almost filled the gap I've been talking about for a while. I'm going to put a level right there. So around 146 to 147 a share is what I'm still expecting Amazon to tap out at before having a relatively healthy pullback. I'm not going to say a sell-off. Earnings pushed it up. Even if we sell back to the previous high in this channel before the earnings breakout, which is this top highlight, that is the safest entry for calls if you don't want to buy and risk this having a pullback and then pushing off that. What's up, Reezy, with you on that? Big bounce. Yeah. So Chris, it's late. I saw what you said about Apple, but yeah, if Apple does hold the area it's at, a massive bounce is going to come in. The previous all-time high bouncing for Apple, that will bring in a lot of volume pressure, extreme buyer side. And looking at Amazon, for calls low risk for my personal trading style, I would want to see a pullback, and I'm going to raise these levels since we are above, a pullback to around 135.5 to 136 a share for the lowest risk, highest reward for call side entry. If we don't pull back that far and we just range in this area, this is when I like to use the 4-hour and just go back in time to see where exactly could there be a bounce above that 136 area. So I'm looking for the main standpoint. We have a double top right here. It's only about 138. Price right now is around 139. So this would be a nice area to have a possible bounce. We rejected this as a double top. Also trying to hold it as a support before the breakout happened. Yeah, I'll chart SPX. I got you. Don't worry. I'm going to be going in alphabetical order, so that's going to be one of the last ones, sadly. But I'm going to speed through this as much as possible. So using this double top historically, in the current moment with Amazon, we can't see much structure of zones on the earnings breakout to the upside. So we need historical price action in that zone. We have this double top rejection. I'm going to make this purple so you guys remember what color it is. Go back to the current PA. This is the main support if you don't want to wait for the previous rejection that broke out to the upside. That 136 a share is like the resistance to support flip pullback. This is the indication of if this level holds on a pullback, 136, I can go long on calls. If you're looking just for a scalp or a possible bounce without the 136 touching, keep eyes on the 138. This has been a historical level that's rejected as price action goes up towards it. And when price action is above it, it tries to hold it as support. And of course, use the 143 from the high from Friday. Don't worry about using price action back historically, because if I put a level here and I make this one orange and I slide back again, come on, there we go. Look at this orange level. All price action, all levels, they always come back into the picture. Look at the rejection on this. It's not like an exact pinpoint, but just in this area. Okay, we're gonna put a level here. We go back to the current time frame. We basically like tapped out at that level on Friday. All levels of price action reoccur. So using the 143.6 area, we need to break above for continuation, but we have a level at 146 that will be approaching. So it's very, I don't want to say skeptical, but lowest risk for calls for my personal preference is 136 a share. If you're looking to scalp it or just play like a day trade on it, look for that 138 volume buying pressure. On the upside, resistance will be Friday's high around 143.6. And the gap fill I still want to see happen is roughly 146 a share on Amazon. So now going to Boeing. And this setup I'm already liking, because I know what that level's there for. Okay. So going back on the daily first, just to give you guys a good perspective, I've always talked about using lower highs on a downtrend. And once trends reverse to the upside, you want to focus on those levels again. The wicks that we're currently at on this pullback for Boeing and current price action historically has been a rejection zone. So just like we always talk about, when you're on a rejection and we break above with price action, pullback should hold as support, a resistance to support flip. That's your low risk, high reward entry for calls if you miss the breakout. Using that level and going back to the current times, Boeing is currently at that point of trying to hold support. So as this shows that pressure of strength, and yeah, and like what Mr. Trey just said too, I'm trying to get volume involved with charting, but when pullbacks on light volume happen and we hold a level, watch the increase on volume once that pressure starts to curl on the candlesticks. Pullback with light volume is showing you it's not selling off, it's just readjusting to that next entry. That's when the volume will come in. If it's a heavy sell-off with volume, you want to be a little bit hesitant and let it do its thing a little bit longer. So as Boeing is holding this 229 level, historically rejection, now it's going to act as a support. If we break under, we're going to have a gap filled of roughly $220 a share, the previous zone. If you want to raise this up, you can, but I'm liking how this rejected better compared to this being chopped. It broke above, pulled back under, broke above, pulled under. I'm liking the rejection that happened before the fake breakout that pulled back in. So if we do hold 229, you can use the double top right here, not the high. If you want to use the high, go for it, but I would be looking at the 240 for the rejection. So we got a nice support hold for calls, 229, gap fill for the resistance to 240. If we break 229, we should fill a gap to 220 as a support, which was the historical level that was unable to break out and hold on the upside. If we break 220 on the downside, I expect a lot of chop around 215, but I would not be surprised if we fill back down to $210 a share. If we break 240 on the upside, going back to the daily, I'd be focused on around this level right here, about 245. We try to hold support, rejections on pushes. So breaking the 240, which was basically Friday's high, or Tuesday's high, around that area, 245 to 246 will be the gap fill to the upside. Okay, so this is one people have talked about a lot. This is Disney. Many people have brought up Disney only because we're right back to the support that we were just at for I don't know how many days. We broke out, now we're back down. Bullish or bearish? Disney has earnings coming up. According to what Webull, it's saying the 9th for me, which I believe is Wednesday, if I'm not mistaken. I think so, maybe Tuesday. It's one or the other. I don't think Disney has the pressure to move upside. I don't know if the earnings is going to be good or bad. That's obviously going to like be the make or break for Disney this week. I don't recommend trading it. All levels are still intact. These have been the same levels for the past months now when we've looked at Disney. Main support hold that has to stay above 85.4. If we break out to the upside, 87 a share, that has to break and hold. Above 87, we have 88, which acted as a historical support. Every time we push up towards it, we reject. When we break above it, we can't hold on the downside. Resistance to support flip. If we do break to the upside, just like what Mr. Trey's just said, we got that 90 gap, $90 to $91. Above 90, we got 94, 97. If we break on the downside, I don't believe I have levels, and I don't, but I'm going to show you what I believe is going to happen. I'm not focused on this right here, this 84. That was just one of those pullback liquidity grabs, send it back upside. I'm going back to 2020 right here, roughly $80, $79 to $80 a share. I expect the pullback to be there, if not lower, if earnings are bad. I don't see us moving heavy before earnings. So just watch these levels have been the same for the past months. Main support, 85.4. First resistance, 87 a share. Second resistance, 88. The gap fill that we need to touch and or break out for continuation, which is 91, $90 to $91. And the gap fill to the upside, 94 and 97. Downside break, we will easily see at a minimum $78 to $79 a share. It's only a $6 drop, but if this falls out of this quote unquote support that's been holding, Disney could start to just tumble very fast. So now DraftKings. I'm on the daily just to show you this candle from earnings. Shot up, pulled back. The zones were still holding. And with the earnings, not much has changed. I had a gap fill to 35, which roughly missed by about 50 cents. So we basically hit the rejection zone. The reason I had 35 a share, we tried holding support on that. When we broke out to all-time highs after the IPO happened, the heavy pullback held at $35 a share. So using that, we got close enough to that rejection zone. Are we going to go higher? Are we going to go lower? We're back inside the two zones we talked about last week, which is the resistance of 31.5 and the support of 30.4 area for this chop and consolidation zone. Earnings shot it up. We rejected right back down. If we break on the downside, I expect us to fill the gap back to $26 a share. Under that, I do not have levels other than 21, but we do have a few that we could have chart out in here based off projections that acted as support later on. So if we fail $30 a share on the downside, we should fill the gap to 26.7 area. If we break above $31 a share, I expect us to push back to $35. We need buying pressure to go back to that level, if not higher. Oh no, Chris, you're good. I'm peeping over. Don't worry. I'm peeping over. Any thoughts? Don't be scared to type stuff out. So someone in the chat said IONQ. If you're in here, I hope this is the one you were referring to. I'm not sure if that's like a futures thing, but this is the IONQ that Webull displays. I don't have futures or anything on Webull. They don't offer that. So I'm going to be charting this, and I'm hoping this is what they meant. So going off what I see on the daily, I'll go back real quick. Yeah, that's what I found out when I looked up the chip stock. Okay, so this is fine then. That's what you're saying. Yeah, so this is the right one. So we broke out of this cup and handle. These are one of my favorite setups, the breakout and the recontest, which we're currently back at the zone where we could bounce. Using the bigger time frame, we know we're forming that handle for this cup after the brim has broken on the upside. Coming down to the 4 hour and the 2 hour, this is when I like to put trend lines in just for a visual. I'm not saying it works. It just gives me the idea of, okay, we're making higher lows. Pullbacks are healthy in this standpoint. Mr. Trays, bro, the BF, I don't know abbreviations. Type it for me. What does that mean? The actual two words. Okay, yeah, that's what I figured. So I don't like talking about bull flags because they're not in my structural like standpoint. It's the same thing as a bull flag pulling back to a support zone in that reference area. But yeah, like it's forming a bull flag. We're pulling back with a handle for that cup and handle, which is also a resistance, which we're pulling back to support. We're holding the trend line, the previous higher high as we were pushing this trend. This is looking like it could curl off of this zone. The only issue, since I know nothing about this, I don't know how it moves. But every time we've had these slight retractions, whether it takes a while or not, it gains that momentum to push higher. So every pullback is healthy, it looks like, with IONQ. If we can hold, I'll put a level just so I have a visual for you guys. If we can hold roughly $17 a share, if we pull back to that point, this is going to have another rocket. I don't know how heavy it's going to push, but we're literally back to where I love entering these type of plays. This is my favorite setup. The risk to reward is always amazing. It has a huge win rate. I like this setup. If 17 a share can hold on a pullback, I would go long, whether it's shares. I assume there's options with this chip stock, I am guessing. So this is good with time. It could happen quick, but using time to your advantage for stocks like this is always best in your favor. $17 a share hold. This can push up and break $20 on the upside. So now moving over to Mara. And for those of you that may not know, which I hope you all do, it is a part of crypto moves. So looking at Mara, we're currently at a support zone in the current PA. Using historical basis, though, we're also at a rejection zone that's happened. Tried to hold support before breaking down. So we know this level has a purpose, and outside of just like the past few weeks, it's been trying to hold support already at roughly $15.60 a share. I personally feel Mara and Riot move with how crypto does. So I am going to pull up the Bitcoin chart just to see the correlation possibly. As of now, just going off the Mara levels that I see, this rejection zone, and also putting a level there, roughly around $18.60 a share, roughly. A lot of these levels are going to be annoying for me. Mara right now has to hold roughly $15.60 for a support zone. If we don't hold that support, I don't know how far we'll dip down, but just using the gap fill strategy that I tend to use, I could see us filling almost $1.30 drop, $1.30 down to $14.31. So the main support for Mara is roughly $15.60. The breakout to the upside to show strength is roughly $18.60. First support on a break of the 1560 is roughly $14.30. It's currently in a chop zone though. So this is more so like a guess or trusting levels when entering. That's the biggest thing about these kind of setups. And I'm going to pull up Bitcoin real quick just to show you guys. This is not, why is it not coming up? There we go. So looking at Bitcoin, notice how, I mean, majority of you should understand how this all works. Mara and Riot move not in correlation, but mostly in sync with how crypto Coinbase move. Bitcoin currently is at a level of my holding for support, which is roughly $18,600. If we break that, the gap fill to the downside roughly 25,000, and of course the next gap fill back down to $20,000 a share for the coin. And just like what Mr. Trey said, the structure is similar. It's kind of like using SPY when trading like Apple, Amazon, or Tesla. It's not an exact idea, but it gives you confirmation on like what's going to happen with the move. It's like a sector for Mara and Riot using Bitcoin. That's how I like to do it. So Bitcoin's currently at a nice support. Going back to Mara, Mara is also at a key support level that has to hold. So now going over to Microsoft, and I'm doing this just so I can explain to you guys why. I'm on the daily because we could not hold the all-time high rejection as a current PA support. So we're back underneath like the all-time high rejection zone. Using that, where's the gap going to fill? The same levels that we've had for since May. We're going to use those in correlation right now. The only level I'm going to add, the current area we're at should act as a support level, possibly. So we're kind of zoning right now. Understanding Microsoft can push, also understanding it is currently in a downtrend. If you want to use the actual all-time high back down to where it's at. But either way, we're making lower highs all around for this time frame right now. We're not able to break structure to the upside. We have a massive support, which has been a double bottom, if not this possible liquidity grab just to push this higher. Watch tech sector, watch communication sector, watch the QQ this week. Use that for Microsoft if you're going to trade it. If we break $328 on the downside, we should fill the gap where we bounced before at roughly 320 a share. If we break 320, I expect us to fill the next gap, which was the previous higher low off of these trends right here. This dipped by around $312 a share. If we hold this $328 a share support like we have before, I expect us to fill the gap that I see. If you want to use this double top area around here, that's fine. But I kind of want to use the break to the all-time high, which is this initial push. So roughly $338 a share for Microsoft for the gap up if it holds support at 328. So now moving over to NVIDIA. Just want to make sure it's still where it's at. I've not looked at this chart. It is still at the contest of price action for all-time highs. We broke structure on the symmetrical triangle, lower highs, higher lows, however you want to call this, squeezing wedge, so many different terms. We broke underneath. Now we're trying to hold the previous in the trend movement. Come on. There we go. Notice how every support with higher lows or whatever you want to call it, they usually play into effect. Notice how they wick below. Retail, from a simple mindset, oh, if we break on the downside and I have calls, my stop is the previous low on the PA. Notice how they wick this and send it right back up. Like just think about that for the guys and girls that may not see that until after it happens. The bigger picture gives you the move. As of now, if we don't break and hold under $440 a share, NVIDIA is going to break back to the upside. We have a resistance at roughly $453 a share and then $460 a share before going back to contest the all-time highs. Yeah, Mr. Trey's literally, bro. I mean, there's a lot of stuff that people don't recognize or teach because they think it's just like, oh, it just broke and then came back. It's whatever. The algos are buying off of a specific price. This is all meant to happen. This isn't just like, oh, heavy sellers came in. No, the algos make this come down. No matter how many buyers there are, it's going to pull that trigger to get the buy sides out and then push it right back to the upside. If we have a pullback to the same zone at $440 a share, that is where I would be looking to buy calls if QQQ is strong, if tech sector is strong. Realize why I keep saying this. An individual stock is not going to go crazy if the entire market or the sector that stock is in has that downside. It's going to follow at some point. So using this, watch the $440 share on NVIDIA. If that breaks, watch the $430 share. If we bounce off $440 a share, watch the gap fill back to $453, possible break up to $460 a share. So now PLTR, and this is at a beautiful spot right now. So just going off the daily, this level here. I had this here based off the support tried to hold. We wicked underneath historically. Why'd you spread out? Don't need this right here. There we go. So we got the red level, which is roughly $17 a share from the wick. Once we broke back up and we tried to regain the new support. That's where the $17.80 comes into play, roughly $18 a share. Once we came back to those levels, we tried to hold it as support for a few days, almost a week and a half. Then we broke down. At that point, looking to see when is it going to recontest? When are the levels going to recontest? That's where we currently are right now with this price action. So if we fail this rough $18 a share, $17.90, we're going to fill the gap back down to $17 a share. If we fail $17 a share, we can possibly raise up this $15.50 area up to about $16 where these wicks were happening, around this area. If we hold $18 a share and push back to the upside, obviously we have the high from Tuesday, which is roughly $20.35, but I have a gap up to $21. I don't know if we'll break 21, but the main gap fill I've been talking about for a few weeks with you guys is around $23 to $25, where we've had a lot of chop and indecisive sellers or buyers. There's a lot of like miscommunication with where the stock wants to go in these levels. So until we fill that gap, this is going to keep moving how it's been, massive. It's slow, but it moves consistently. If we fail $18 a share, expect that pullback to $17. Watch this trend possibly hold. If we hit $17 a share, possible entry. If we don't break $18 a share and push upside, watch Tuesday's high and then watch the $21 a share for a rejection. So now this is one people have been bugging me about, the QQQ. As of right now, $372 a share is the like make or break level. Just like if we go back to Apple real quick, Apple's make or break was this 187, which after that broke, we dropped a whole another $5. For Apple, that is massive. A $5 drop in a day is pretty big. It doesn't usually move that much on the downside, usually just the upside. When looking at the QQ now, focus on the same setup that we were in as Apple. We're at the heavy support, which is literally like the double top that couldn't break, and then we sent above that, $372 a share. If we break that level, it's going to be the same exact type of chart fill as Apple, the previous higher low, which is literally almost a 10-point drop to the downside. I'm not saying it's going to happen, but I'm just telling you, if we break this 372 level, we are going to fill the gap to roughly 362 to 364, guaranteed. We could drop to like 368 and push back to the upside, but this is the gap before we have that next leg up to the upside again. As of now, bearish is what I'm looking at, but we can, if we hold 372, we are still bullish. This level has to hold. If we do hold it, focus on this rejection, or support, which is now rejecting, but historically it was a support, roughly around $375 a share, 375.5. If we push back up, that is the short entry I'd be looking for. But if you're getting calls around 372 and we push, this is the make or break level that has to have volume on the buying side. A break of 375 to push it back up to possibly the trend, or at least the support or rejections around this area. So if we somehow have a bullish push before CPI on Thursday, I expect QQQ to tap out at 380 a share, roughly a $9 push to the upside. If we fail this current support, I expect a possible $7 to $8 drop to about 364 on the QQQ. And as of now, it's indecisive, but looking at it, it's like, holy crap, this is so bearish. 372 has to break under and hold for this to continue on the downside. Breezy, have you ever faded the first move? I usually do not play any news releases. CPI, FOMC, jobless claims, PPI, earnings. I tend to stay away from that stuff. So I do not, but I know Hassan does usually trade CPI since he's able to trade options in pre-market. So now looking at the next stock, which is Rivian, RIVN. When looking at Rivian, and I'm hoping a lot of you feel the same way as I do with this, the gap fill I have been talking to a few people about is roughly $30 a share. It's like $29.50 area, $29. Until we break above this rejection we've been having. I'm not really focused on historical levels for this price action. It's more so just in the moment with what we're looking at, focusing on the fact of this uptrend broke structure. Once we pulled back, we tried to recontest and break back inside. If I go to the 1 minute in the 1 hour, notice how this is so correlated. The last higher low we had in this rising wedge of trends pulled back and rejected. So as of now, Rivian is showing downside. We need to break above this white highlight before the bullish action is back in this individual smaller time frame segment of this formation. If we pull back and reject that level, we should fill the gap to the start of that trend after the bull flag, quote unquote, breakdown. So looking at levels for Rivian, if we do push, roughly $27 a share is going to be a rejection. Current level of support, which is basically where we're at, I want to lower it slightly just down to where this support was trying to hold. So roughly around $24.50. That could be like a fake wick out. Using these wicks from Wednesday and Thursday, we could drop below very quick just to be bought back up on Rivian and pushed to the upside. And if we do fail $24.50, I expect us to fill that gap to roughly $23.50. That's just what I am assuming. I'm going to change these colors real quick. So quick recap on Rivian. If we do push, I expect there to be a rejection around $27 a share. If we break above $27 a share, this will and should have momentum to push up to that $30 gap fill. If we fail, even contest the 27 reject or just right where we're at reject, we have a support at 24.50. Underneath that, 23.50. So now going over to Snow. And this is one of those stocks that I do not trade, but a lot of you guys ask about it, and I feel like I know why. So as of now with Snow, we filled the gap that I think we talked about this last week around $161 a share. We wicked underneath that, pulled back. We're back to that 167 support / resistance level. It's tried to act as support historically. When we're underneath, it doesn't usually reject, it pushes right back up. Mr. Trade's exactly what I was thinking. I just didn't want to say it. So we're at that 167 level currently. If we cannot break above and hold, a closed candle over. I'm not talking a 1 minute. I'm talking a 30-minute plus, maybe even an hour or 2 hour candle, close above 167. I've been loving the gap that Snow has. We have a nice resistance midway, which is basically the 50 derivative. If you use a fib level, it seems like around $180 a share, $181. Outside of that level, if we break above, let me make that orange. A break above around $181 a share, we can see that gap fill back up to $191. That's going to be the main focal point of this chop zone that Snow has been, just up, down, up, down. We need 167 a share to hold this support and close over. If that happens, we should fill the gap to at least 181 a share. If we fail and can't hold 167, I expect us to contest 161 again. If we fail to 161, this is when I use just my little trend line level stuff that I do. I would expect us to pull back, not instantly, because as you can see, we have a zone here that could try and bounce at roughly 155 a share. But if we fill the actual gap to the previous drop off, that will be back down to about 146 to 148 a share. Keeping it in the smaller time frame, 167 has to break and hold above for calls. If it rejects, watch a bounce at 161. For the upside resistance, 181 is the first PT. 191 is going to be the gap fill to the upside. Okay, so I'm going to briefly talk about SPX. I have tons of levels, so I apologize. I'm going to hide those just for now. When looking at a chart like this, we can't see pre-market and after hours, which is not an issue. It doesn't change anything. It just gives us more of an open price view. We can go to SPY, we can look at the ES futures and get a better idea what happens at 2 a.m. But just looking at the bigger frame of this, when I see something like this, and I'm actually going to, I don't want to delete all my levels. Let me just do this. I'm going to zoom down so we can see. When seeing the chart have this downside effect, obviously everyone wants to catch puts on a pullback. We broke through a massive psychological number on SPX, with that being 4,500. We've tried to bounce off that level before on sell-off. This is not just like, oh, it just pulls back to it. This is like a whole day of straight downside, days back to back of downside. We've tried to hold this level before, and then we bounce off that level. Now that we're underneath, what I want to see happen is a recontest for a rejection at 4,500. If we don't get that, I'll play the zones and the PA as it forms. Looking at this chart from just what you see right here, this is what I've been focusing on. This zone fill around this area. We've rejected it. I'm trying to get some areas going. There we go. So we've rejected this level before here. You can even raise it up a bit if you want, but I like it around this area. We then held it as support right here. Once we broke back underneath to the downside, guess what that level did? It rejected twice, basically, before the overnight gap up that happened. Understanding that, I truly believe we can fill a gap. I want to see 44.66 for this support right here. But if we break through 44.66, I truly believe that we are easily going to see this level, which is roughly 44.40, 44.44. And I'll make these colors better visual for you guys. So the first gap, and obviously, as you guys can tell, I'm literally just thinking of downside for SPX this week. Yes, I want to see a pullback first, but overall, I'm focused on what can we reach on the pullback. I want to see a healthy pullback. If we can contest 4,500 and reject that, I expect us to touch 44.66 this week pretty fast, possibly bounce off that level of 44.66, but I would love to see the fill down to 44.40, 44.41. ES right now is at 44.99. So yeah, it's literally at the same psychological. I think if ES and SPX push, if SPX hits 4,500, I think ES is like 45.20 something. I believe 45.22 should be around that area. So I would like to see SPX contest 4,500, reject, fill the gap to 44.66, and fill the lower gap, which this is the main bounce I want to go for calls at 44.40, around that zone. So SPY is basically, obviously, it's the same setup. So just the rejection correlation, 448.3 is the same 4,500 on SPX. So for SPY's rejection, I would like to see 448.3. I'm going to take away a few of these levels, so all you see is that. If we pull to the downside, same correlation with SPX. The first level I want to see happen is 443 on SPY. If that level breaks, that's when I'm looking for the fill around 437, $437 a share on SPY. So going, hang on, that may not be accurate. Yeah, for SPY levels, because we can see the pre-market and everything on SPY right here. So the first gap fill I want to see on SPY, $443.30 area. The level below that, I don't really hope to see, but SPX would drop below 44.40. But I would like to see SPY healthy pullback. This is not a sell-off or a bear market. It's just sellers are taking their money. They're going to rebuy on the dip. SPY at $437 a share going off this previous trend of the higher lows. I would love to see this level right here contest one more time. That's going to be my key indication. If we can hold this and bounce, we should push the all-time highs by end of the year. That's just how I'm interpreting it. So looking at Tesla, I don't trade Tesla very often, so I usually just give you guys the same levels that keep working, and that's what's been going on since we've been charting this. So we're still not able to break and hold above that $255 a share level. We're breaking above, pulling back, but we can't bounce off it like we were. So we're still weak on the downside. We're making lower highs on Tesla at the moment, but realize we have a lot of support underneath us. So it's not a good indication to go puts because we're looking weak. We have a lot of support bounces coming at 248, at 240. If we break 240, that's when we're going to fill the gap to roughly 220 a share on the downside for Tesla. If we can break above and hold that 255 level, we're going to contest 267. And I would assume if that breaks with buying pressure, we'll easily get up to 280 a share again for Tesla. Hey, Mr. Trades puts off open. If you want to, go for it. I'm going to do my usual and sit back with my arms crossed. So looking at UPS, we just hit a rejection. We're looking like we're going to break on the downside. So let me see if there's any hidden support possibly. It looks like there may be in this area right here. So UPS is slowly approaching a level that was acting as a kind of a resistance. It would wick above and pull back on the daily. If I switch to the 4 hour, it may look a little bit better. So now we're pulling back. I would not consider this like a cup and handle. This is just like bullish trends flip the bearish. We're pulling back, trying to find a new support zone to carry this momentum, possibly. Not saying we're going to pull back that heavy, but it's the idea of finding a level which around that $179 a share, that should act as a nice little price action response, whether it's buyers or sellers, whether PA's dropping to it or pushing back upside to that 179 a share. If UPS can hold, I'm not going to chart this too much because it looks like it doesn't move very good. There's not many levels to find that stand out compared to everything else. So I'm going to take this down to the smaller frames to use current price action off this move. So we can use this area right here, roughly rejected before the breakout, held it as support on a pullback, support on a pullback. Now we're kind of chopping in that area. So if we fill a gap to 179 a share, we could push back up to 182. If we break 179, it looks like we could fill this back to roughly around this area right here. And the reason I have it at that zone, putting a level in that's roughly around $176.60 a share. When I zoom in on this, I'm going to try and expand this. There we go. Notice how when we tried to push and we did have the breakout, price action never really held consistently above it. There was always a contest of rejection, then the breakout. Contest, rejection, then the breakout. So this level is showing signs of like a predetermined move that could happen off of it. And that's just what I'm taking from it. It's probably not accurate, but every contest pulls back and then rockets above a day or so after. So could we pull back to that level and buyers just snap it up? 176.6 area gets bought up and we push right back to 182. So we have the first level of support to possibly buy at roughly 179 a share. If we break that price range, we should fill a gap to roughly 176.6. The first rejection I see on the upside, if we push higher, roughly 182 a share before going back to about 188 a share. I like the gap fills. I don't like to worry about all this chop in between. If you take the time frames down to like the 30-minute, you can probably see better. But I like to focus on like the moves that happen. Buy time and let the chart do the work. The chart is showing if we break and hold above 182, we can fill the gap back to 188 a share for UPS. So going over to Upstart now. Dang, this was a 72 a while ago. So going off the bigger picture for Upstart, just to see, and we have filled the gap. It looks like we filled it dead on. That's crazy. So before the gap down from the last earnings in May of 2022, Upstart had that massive overnight sell-off. This is going to be the gap through. These are one thing that I love talking about. It happened with Meta. We broke above. Amazon slowly approaching that gap through. This is what I like to use. So now that Upstart has filled the gap to that pre-low before the earnings sell-off, how low are we going to go? Could it be to the high after the earnings sell-off that we pull back, started to curl, make that cup and handle? So we got two levels. We have a rejection. We have a main support. Using these two, how accurate are they going to be? outside of this 54.6 area, which was like the double top before we pulled back and formed this cup on upstart like this double top right here, using this level, I'll make it blue. That was the breakout level we needed as we pushed back to the upside, which we broke above, pulled back, held the area, a good area of support in that zone. Then we broke heavy on the next day. If we pull back, $54.50 area should act as a support, but along the way, you can't keep this out. Rejection, once we broke above, it pulled back and held support here. So we have two supports actually before breaking and filling the gap to the downside. If we hold the first support, which is not as safe to enter for calls, roughly $59 area, that's going to be a zone that should act as buying pressure. If we fail $59 a share, we should fill the gap roughly to $54.50. On the upside, with how much strength this has in a bull market or just straight upside for SPX or SPY or QQQ, Upstart can easily break its high reject of $72 a share. I'm going to go back to the daily just to show this. Once we break inside this structure above $72, we can fill the gap back up to the highs, which is roughly $88 to $90 a share for Upstart. It's going to take a lot of momentum, but if it can show strength and hold at either of these two support levels, either $59 or $54.50, if those can hold, I expect us to keep pushing upside on Upstart, breaking the 72 rejection that we had. So XOP is the oil and gas ETF off the S&P. This is basically the same, and I'm not sure if it's exactly, but XLE with energy. I'm going to pull that up in a second to see the correlation. But first, I'm going to chart this for you guys. Going off of what I'm currently looking at, I have not traded this before or looked at it. So I'm kind of just getting a gauge for it before I just start talking. And it looks like this double top on the wicks for the daily, around this area right here, in between this blue dot. We had two wick tap outs, roughly a rejection, and we're kind of trying to hold support there now. So this zone in this area acted as a nice rejection as price action approached. Once it got above, it tried to hold with these wicks on the pullbacks. So around this 143.3 area, we do have a price action respected level. Weekly wedge, let me go to it. Oh wow. The weekly wedge, yes. Okay. So we're breaking out right now. Yeah. Let me put these in just so the people that are watching this video can see. You can either put it here, or if you want to be those people that do like the top wicks, you can do that, but this is very invalid in my opinion. Doing it this way, I like a lot better. Somewhere around like this. So it's the same setup like Costco, Ford, American Airlines a few months back before it had that breakout. The weekly is looking like continuation. If I take it down to the 4 hour using that 143.3 area, a pullback here is not going to be abnormal. Notice how every pullback on this push up for the past few months gets eaten up from buyers. So you just need to make sure either it holds higher lows off trends. Notice how that every pullback is still a higher low. Nothing breaks structure. So if we do get a pullback, we just have to hold above the previous higher low, which was roughly around about 139.6 a share. So if we pull back to 139.6, that is like the main support that has to hold. Just for trends though, we just need a higher low. No exact price action. We do have a 143.3 level. So these are the main two supports I'd be watching. Gap fill to the upside is not really like, there's no number really. If you want to use this zone, you can, but there's not much really going on outside of just continuation, keeping this ETF moving. I'm going to pull up XLE real quick just to see if the correlation on these is anything close to each other. So here's the weekly for XOP. And here's the weekly for XLE with energy. So they're both trying to curl on the highs. It's not the exact same setup, but the idea of the breakout on the weekly for this wedge is what's happening. I'm trying to get this so I can. There we go. So the energy sector is trying to break out as well, possibly pushing the all-time highs. So before I end this for you guys, do you have any last minute tickers for the few of you that are in here? If not, that's perfect. If you have, okay, XLU, I don't want like a batch, just like 1 or 2 or 3. I'll pull up XLU. Yeah, I'll look at XLF too. XLU and XLF are the last ones I'll look at. So utility right now, that is support still. And this is the weekly, so it's not, I'm just checking to see what's going on. Why are you looking at us like that? So with the weekly, the wicks are getting bought up on the weekly time frame. That's currently where we're sitting at. Switching over to the daily time frame, this is when people usually get scared into positions to force puts or do anything that may cause a distribution of the price action. Using like the 1 hour, the 30-minute, you can't see much going on. So you have to use the bigger picture to give you confirmation on what to do with this. So using the daily and the weekly, give it time to show relative strength before just entering blindly thinking like, oh, we wick down here, we always buy back up, so I'm just going to buy calls. I would give this until Wednesday, maybe Tuesday at the minimum this upcoming week. Give it a day or two to form a few daily candles. I mean, you've seen that when we come down here, it doesn't bounce right away. Yes, it has a push, but it always pulls back and shows more reason of conviction of strength. So I would use just the trend on the daily and the weekly with the wicks. Trust that and just let the chart give you a visual before entering. I'm going to pull up which is fine. I think we charted this last week as well, so we're still in the same setup from last week. We're still in this fallen wedge. I like to consider this a possible cup and handle form. We're rejecting the brim currently. Now we're pulling back. I would like to see a pullback to this white highlight, which is a rough 70-cent drop. If we can hold this falling wedge, aka the handle for this cup, I truly think that finance, I mean, I'm bullish on finance, banks, institutions, I'm looking upside. I truly think tech is going to sell off and the money's going to filter in the finance, energy sector, and possibly real estate. Material could also be in there, but real estate usually floods in with the financial sector. If we can hold this wedge, I truly think finance will push upside. We can actually use a few of these rejection levels as a current support as well. This is going to be the same as XLU, letting a few daily candles form. A possible wick down on a daily to catch the bottom could be a nice entry, but we'll see how futures open tomorrow and we can find more consensus with what could happen with the ETFs.